a warm welcome to today's edition of Money Moves. I am Melissa Enoch here at the FMDQ studios in Lagos.
I am Grace Agbarago. It's Wednesday, the 3rd of December. We thank you for joining us at this time on the show.
All right, then let's begin with your news now. The Central Bank of Nigeria has removed all limits on cash deposits and increased the weekly cash withdrawal limit to 500,000 naira for individuals and 5 million naira for corporates, up from 100,000 naira. Effective January 1, 2026, the CBN also abolished the monthly special withdrawal authorizations and maintained daily ATM limits at 100,000 naira. Excess withdrawals will attract charges of 3% for individuals and 5% for corporates. The revision aims to streamline cash management, address security concerns, and curb money laundering while promoting electronic payments. Embassies and diplomatic accounts will no longer enjoy exemptions. In Windhoek today, the Bank of Namibia's Monetary Policy Committee announced that it is keeping the key interest rate unchanged at 6.50%, saying the current stance remains appropriate to support price stability and maintain the currency peg. Governor Johannes Gawahab, addressing what will be his final MPC briefing before he steps down on December 31 after 5 years as governor of the bank, said the decision reflects a balance between subdued inflation and the need to safeguard economic stability amid global uncertainty. Let's take some excerpts.
The MPC decided to keep the repo rate unchanged at 6.5%. Let's consider recent economic developments in our country. The domestic economy grew moderately. Inflation has remained well contained, while growth in the private sector slowed since the previous MPC meeting. Growth is now projected to slow from 3.7% in 2024 to 3% in 2025. That's 0.5 percentage point lower than the previous forecast. Looking ahead, real GDP growth, however, is projected to recover to 3.8% in 2026 and further to 4.3% in 2027.
The World Bank has released its latest international debt report showing developing countries paid out $741 billion more in debt service than they received in new financing between 2022 and 2024, the largest gap in 50 years. In 2024, they restructured $90 billion in debt and secured $80 billion in net bond financing, but at high average interest rates of about 10%. Total external debt reached a record $8.9 trillion, with $415 billion paid in interest alone, diverting funds from health, education, and infrastructure. With bilateral creditors pulling back, many countries turn to domestic borrowing, increasing financial pressures. The report warns of severe social impact in the most highly indebted countries. Over half the population cannot afford a minimum healthy diet. At the official launch of the Pan-African Payment and Settlement System Cowry platform in Lagos, which marks a major step towards seamless cross-border payments across Africa, officials say the success of the platform depends on trust and strong partnerships, ensuring that payment flows are secure, efficient, and fully interoperable across different systems on the continent. Here are excerpts.
For us, interoperability means that the different platform, the different payment system can talk to each other. That will allow, if you are a business person in Egypt, you can make a payment with your system to your counterpart in South Africa that use different systems that allow you as a Nigerian consumer that if you want to buy a goods from South Africa, you can use your system and you can make the payments for the other systems. So it's very important for us. It's important also on one of the goals that is the digital trade protocol, that is to boost the fintech, the financial technology work when it comes to digital payment. When it comes to sovereignty, for us, it's really African to have a control when it comes to the money flows. So it's a control in terms of risk, is a control in terms of standard for payment. So it's very important for us that we have this sovereignty, that you can make a payment and your payment will go fast from one side to another without using a non-Africa platform, with the risk of having high fees, with the risk that you can be pulled out any moment, and with also all the constraint in terms of a delay when the payment has to go from Nigeria to South Africa via launch. So,
still on the PAPS Cowrie Forum on Tuesday, PAPS Card signed a memorandum of understanding with Pay Attitude in a move set to expand digital payment solutions across Africa. The partnership aims to boost fintech innovation, drive financial inclusion, and enable seamless cross-border transactions using local platforms, strengthening the continent's payment ecosystems. Here are excerpts.
Pay Attitude, Nigeria's pioneering payment scheme and leader in multi-bank digital payments, and PAPS Card, the innovative card initiative of the Pan-African Payment and Settlement System, or as we've called it all day, PAPS. Exactly does this moment symbolize? What does it mean? It means that for the first time ever, cardholders can now enjoy seamless, real-time, and secure transactions, not only in Nigeria, but across Africa and worldwide. Can we give a round of applause? That is exactly this partnership lies a shared vision to break down barriers, connect payment ecosystems, and simplify payments across borders. So ladies and gentlemen, as they have affixed their signatories to this agreement, can we applaud this remarkable alliance once again that is advancing Africa's digital economy and building bridges for individuals and businesses to transact easily, securely, and without borders. Next ceremony, we will be having PAPS Card, the partnership between PAPS Card and the Unified Payments. That's
In Egypt, non-oil private sector recorded its fastest growth in 5 years in November, with output and new orders rising sharply, according to the S&P Global Egypt PMI. The index rose to 51.1 from 49.2 in October, its highest level since October 2020, signaling expansion across manufacturing, construction, and services. Despite stronger business, employment remained unchanged as firms held back on hiring. In Cameroon, the African Development Bank has approved a 25 million euros facility to help Cameroon's CCA Bank expand trade finance for SMEs and other businesses. The funds, approved on December 1 in Abidjan, will be deployed as a transaction guarantee, providing risk cover for CCA Bank's trade finance operations. The facility will support imports of industrial, agro-industrial, and telecoms equipment and allow the bank to offer up to 100% guarantee to confirming banks to back letters of credit and other instruments for SMEs in Cameroon. Finally, on News Now, at the 2025 MPG Conference, South Africa Reserve Bank Deputy Governor Rashad Kassim delivers the keynote address, sharing insights on monetary policy, financial stability, and economic growth strategies to guide South Africa's macroeconomic outlook. He highlights the importance of robust policy frameworks, strengthening institutions, and fostering investor confidence to support sustainable development. Let's now listen to him.
About 7 months ago, we launched the Zeronia First initiative. Since then, we have noted a significant increase in the adoption of Zeronia from 6.4 billion to over 200 billion in the initial months. Of course, JIBAR exposures remain high. As of mid-2025, domestic JIBAR exposures were estimated at 43 trillion, while offshore exposures were about 107 trillion. I hope I got my numbers right. Early this year, the MPG officially adopted methods for determining credit adjustment spreads and recommended JIBAR fallback rates based on compounded Zeronia rates. As we approach the JIBAR cessation date, there are three issues of concern to the SARB and the NGP and MPG. So many MPs that I'm busy sitting in that I forget. So the first is, there are all these funny terms we have that the MPG has created. The first is what we call the no new JIBAR event. We are already encouraging market participants to use Zeronia instead of JIBAR in contracts. But around the second quarter of next year, we plan, along with the Financial Conduct Authority, FSCA, to issue regulations limiting new JIBAR exposures. Our aim is to stop increasing the stock of contracts that will need to be transitioned off JIBAR.
I am Melissa Enoch, and that's it on News Now this Wednesday. The show returns shortly with Grace at the FMDQ Archives Room, giving us our markets round. Stick around.
We are here at Africa Energy Week in 2025. First day of the event is booming everywhere. A lot of people, many stakeholders from the energy value chain.
We're here to promote the need for investments in a robust downstream sector to truly have energy security for the continent.
Welcome back to Money Moves. Let's now go over to Grace for today's market updates. Hello there, Grace.
Thank you, Melissa. Let's take a look at how the markets traded today, starting off with the equities. The NGX All-Share Index advanced 0.27%, while the BROVM also edged up 0.13% to 350.79. The Nairobi Securities Exchange fell 0.71% to 178.83. In South Africa, the Johannesburg Stock Exchange gained 0.43%, while the Zimbabwe Stock Exchange also rose 0.54%. And in North Africa, the EGX 30 closed strongly higher, up 1.76%. Let's do a quick round on some of the Pan-African currencies. The Rand strengthened 0.21% to 17.07 against the US dollar. The Egyptian pound rose 0.22% to 47.61, while the CFA franc declined 0.38% to 562.33. The Kenyan shilling gained 0.08%. The Moroccan dirham inched up 0.05% to 9.23, while the Naira appreciated 0.12% to 1,447 Naira 02 kobo. Let's switch into the commodities data deck, beginning with energy prices. Oil prices continue to rise today, with Brent crude up 1.09% to $63.13, while US WTI gained 1.26% to $59.38. Natural gas advanced 2.25% to $4.94, and RBOB gasoline climbed 0.98% to $1.84 as out of 12:57 GMT. Finally, two soft prices. Cocoa was marginally lower by 0.05% at $5,452, while coffee slipped 0.09% to $373.10. Cotton rose 0.11%, palm oil increased 0.08%, and sugar gained 0.73% to $15.09 as of 12:59 GMT. And that's our Money Moves markets today. Back to you, Melissa.
Thank you very much, Grace, for those market updates. And that's it on today's edition of Money Moves. From me and the rest of the team here at the FMDQ studios, we say thank you very much for watching, and bye for now.